With shrinking revenue collection and an expanding wage bill, troubled state-owned enterprises and more demands for social security, the Finance Minister Enoch Godongwana really has a lot to cover in that statement. But let's get expectations now from Ndumiso Khubeka, who is Chief Economist at KH Research Equity Partners. Ndumiso, a good morning to you. Thank you so much for joining us. I mean, there's so much touch points here that we can look at. And I think the first one obviously is going to be that shrinking income and revenue collection, right? And what those expectations are going to be in your view.
Well, certainly, Naledi, and a very good morning to you. The lower than expected tax revenue collections will certainly be the key main focus of this year's medium-term budget policy statement, especially in terms of what the effects or unintended effects of the lower than expected revenue collection, as we would anticipate in this instance, especially when it comes to critical areas of expenditure, when it comes to gross fixed capital formation on the side of public corporations. Here, we're talking about the likes of Eskom, we're talking about the likes of Transnet and major state-owned enterprises that are enablers of growth. In previous medium-term budget policy statements, the wording of growth-enhancing reforms was mentioned, and those state-owned enterprises play a critical role in enabling growth initiatives. And I think in this instance, it becomes all the more critical in order to recover those SOEs so that the sustainable trajectory of our fiscal outlook can be more positive.
Yeah, you get a few people up in arms when you talk about, being able to capacitate those state-owned enterprises. That's the reality, right? So what should that look like? What is it that, what is sufficient to try and get Transnet, for instance, back on the rails? Or, how do you then assist Eskom without feeling like you're putting money into a bucket with a hole in it?
A big part of being able to really build those institutions, and I think it's really the focus should be on institutional development as a whole of these state-owned enterprises. This case in point can be found in a data point that was shared by the African Development Bank, stating that 10% of projects on the African continent reach financial close. And in this specific data point, they were emphasizing the lack of capabilities or capacity when it comes to project preparation, ensuring that projects and even companies are able to have the technical expertise and requirements for reaching feasibility, putting together the right capital structure of debt and equity, and be it grant funding, and of course putting together the right kind of risk profile that both investors, both in the public sector and the private sector, can then be able to participate in as an enabler of growth enhancing reforms. So over and above the resource or financial requirements that are required, there's this idea of around a knowledge bank or the technical expertise that are required to really develop these SOEs in a manner that can be sustainable, and in a manner that can ensure that all South Africans across the board are able to really enjoy the benefits of the efficiencies that are associated with a well-functioning economy enabled by well-run SOEs.
Yeah, can we talk about which ones then he prioritizes, right? Certainly. I think Eskom certainly is a big one. We saw the results that came out yesterday, unfortunately, with a net loss of over 20 billion rand. That continues to be a big area of concern around the financial sustainability of Eskom, but also what is really being done in terms of the infrastructure in ensuring that it's able to meet the power needs of South Africans, especially if we want to project a 3 to about 5% economic growth over the long term, whether or not we'd be able to meet those needs. And so those kinds of considerations become quite important, and the energy mix in this instance becomes quite crucial. But over and above that, the skills requirements associated with a sustainable energy mix in South Africa becomes quite important. This is important, I think, Nalidi, especially when we were looking at the high unemployment rate and how we can bridge that gap in ameliorating those effects of continued power interruptions, but also reducing the levels of unemployment that we see in the country as well. Yeah, look, so a little bit later on, we're hoping to speak to the Public Servants Association. And of course, the expectations, you can only just imagine, right? They're wanting better pay for public service workers. But you've got this constant tug of war between workers and certainly the Finance Minister, for instance, where he already is seeing the public wage sector bill being a third of total government expenditure. That's a big bill. Is it going to get worse? What does he do? What does he say about that? It is certainly a big bill, Naledi, and I think it's one that the Minister of Finance will really need to really apply themselves in a very reliable and consistent manner. One of the key things that we have noted over time is that in capital markets, one of the key things that is required is predictability and consistency of messaging, whether or not it's affordable. But the moment the narrative or the conversation or the messaging that comes from the Ministry of Finance becomes inconsistent, then it raises jitters in financial markets. So it becomes quite important that the strategy in approaching the public wage bill is really managed in a consistent and clear and coherent manner. I think that can ameliorate a lot of devaluations that we have seen when it comes to certain asset prices in the market. And secondly, I think continuing on the theme around the non-financial resources, it becomes quite crucial to really understand what is the plan to really pick up the number of the gross fixed capital formation number in South Africa. This number, I think, Naledi, is a leading indicator for our economy. Presently, it's been below 15% of GDP, and to really reach levels of 4 to 5% of GDP, we really need to get that number up to about 30% of GDP.
Yeah.
But it is enabled by a function of confidence and business confidence in the economy. Again, the question of consistency in policy, consistency in messaging becomes quite important. And I think this medium-term budget policy statement needs to really harp on that theme of consistency and coherence.